Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. We're taking a look at what's been going on since we got some Thursday morning pre-market data. So every Thursday morning, we have the unemployment claims, the weekly jobless claims number. And then you'll see we've got retail sales and core retail sales, and they were pretty darn strong. We did have a negative revision for retail sales for the prior month, but it certainly was offset by how much better than expected retail sales were. Now, if you're ever curious about what the core version of a lot of data is, you'll see there's a regular version and a core version. Core is usually a ludicrous version of the data that backs out something that, of course, nobody needs, right? So, oftentimes for inflation, they'll back out food and energy because who needs that? And in the case of retail sales, they back out automobiles. So they back cars out. And then they get this core number, which usually just means something's been excluded from the number. Nonetheless, you can definitely see the numbers were better than expected. And in an environment where everyone's thinking recession and the consumer and the economy, that's a pretty good number. Good data has been bullish. So that's been a significant shift since non-farm payroll that we got the first Friday of this month, which reflected July's employment data. Good data is bullish. Bad data is bearish. So we're kind of back to that normalcy because ultimately we can see with the Fed fund futures that the Federal Reserve is going to cut in September. It's more and more likely that that cut is going to be a quarter point. But honestly, who cares? The 50 basis point cut was probably overdone as a reaction to, one, those terrible non-farm payroll numbers, and then backed up by the yen carry trade sell-off, right? And by the way, a lot of folks have been asking me, Rob, of that yen carry trade sell-off, what do we consider a quote unquote crash? That word gets used very recklessly, irresponsibly, and frankly, wrongly. And for the most part, traders broadly, I'm talking broad market, typically will say a crash is 20%. Now, it's all arbitrary nonsense, but there is a measuring stick to it. And you'll see here, based on the all-time highs up at 57.21 and a quarter on the ES futures, which is the only version of anything that trades S&P, right? That's nearly 24 hours a day. That's the main difference, right? Whether you're looking at ES, SPY, at micro S&P, XSP, or SPX, the only one that trades 23 hours a day is the ES futures. So that's what I like to look at for all versions of the choose your own adventure into whatever symbol scenario we have for S&P. But the S&P futures, again, 24 hours. So I'm getting that response in the Asian session, in the European session, in the UK session. That was a 10% pullback, a little bit more than 10%. You'll see the low is right around 51.18. And the 10% pullback was 51.49. It's a 10% pullback. It's the speed at which makes people emotionally start to say it's a disaster, but we've taken it back, gang. And because that was, as I like to call it, big dumb money, having to unwind a big dumb position, it doesn't mean that we're going to get carry unwind 2.0. If you've been watching any of the content that I've been sharing with you all, you know that we came out with that the day after and said, look, big dumb money had to unwind. And I explained all the interest rate differentials. And, here we are back up at pretty much where call it the scene of the crime occurred. And if you add on now the better than expected retail sales numbers, and you add on the expectation that the rate cuts will begin on September 18, it doesn't have to be what was the nonsense being thrown out there on television? They paraded around people who aren't managing money. I think one was a professor and one was a analyst saying we need an emergency meeting. We need three quarters of a cut point. Just panic, right? Just panic. And what we're ultimately going to get, what the data says, not some big mouth on television, what the data says is we're going to get a quarter point cut. And that's about fully discounted. So we have plenty of time, just over a month between now and then. But next week on the 22nd, we'll have sort of the stand-in for the FOMC meeting, and that's going to be the Jackson Hole Symposium. And we'll probably see a lot more clarity on these target rate probabilities after we hear from the man himself on the 22nd. So keep that in mind as well. But good news is, well, bullish, and that's where we sit as we go forward. All right. So the next thing to look at is NQ and YM. NQ was the one that was probably the most concerning of the major averages because it was the one that spent the most time below the anchored VWAP that we've been talking about for quite a few weeks now. And the anchored VWAP has finally been broken. We broke it here on the 8th. We tested it, which is so important, not just a break of a level, but a retest, because the break means the buyers were able to basically outnumber the sellers. The retest means when the sellers were coming back in, the buyers stood firm at that level. That retest is really important. And you can see once we did retest on the 9th, we've been pretty strong ever since. All right. So that's ES and Q. RTY is the Russell is absolutely on a tear. But again, in respect to that anchored VWAP, we're just now starting to accelerate away from it. ES most definitely aided by the strength we're seeing in financials and the strength that we're seeing in healthcare. It's benefiting in a way that's in many ways exceeding that of the NASDAQ. Remember, the NAS is not going to benefit from strength in healthcare. It's not going to benefit from strength in financials, which is why we never talk about the market in the Sector Secrets Mastery. It's kind of a nonsensical thing. I know we tend to say it, but we usually have a specific market in mind. For the most part, I'd say the broader implication is the S&P 500. But remember, we have currencies, treasuries, indices, metals, energies. We have our grains, we have our meats, and we have, so there are multiple markets out there. So we want to think about an individual symbol and what helps it move higher. So with the ES, sure, tech getting out of harm's way is helpful, but the fact that financials and healthcare, which are the other cylinders in the motor of this S&P 500, the fact that they're moving makes it look a little bit better than the NASDAQ right now. S&P is benefited by those sectors. Dow, by the way, is also going to benefit from those sectors. Okay, with that being said, if you have any questions, feel free to type them on in. If you haven't checked it out already, gang, over at the Simpler Trading YouTube channel, the last 2 free videos that I did were specific breakdowns of a process that were about 4.5 months into testing. The indicators that I'm using have been tested for, in some cases, well over a decade, but the application specifically to the S&P is what I've been sharing with you all. Anything that I do undergoes at least 6 months of rigorous testing. And usually we do that behind the scenes. We call that Raghee Labs. But anytime I have something that I'm going to share with you all, it's been tested. So I thought, you know what, let folks kind of get a little bit of a view into what testing is. And testing is not about how can I prove my hypothesis right. It's about trying to break it. It's about trying to prove it wrong. And you'll see if you catch those 2 videos. Thanks for the comments on the one that I left on Tuesday. That was a full-on step-by-step walkthrough of what's being tested right now. It's working very, very well. And it kind of reminds me of what I find myself at this stage of my trading, 30 plus years in, optimizing for. And it kind of reminded me, I don't know, I guess I was going down memory lane, kind of reminded me of the last book that I wrote. I wrote 3 books, made my mom very happy. And the last one that I wrote was in 2009. And in 2009, it was kind of the trio of books I had in my mind. I got a 3-book deal, and I had 3 books in mind that I wanted to write. And the last one was, and these were mostly Forex and currency books, but trading is trading. And the last one was Forex on 5. And what that meant is, what can I do in roughly an hour a day? And really, can I pull it off? And I found that not only, yes, can you focus on a particular style for about an hour a day. So whether that's day trading for an hour or looking at swing trading and building your watch list for about an hour, it's very doable. And not only did I find it's doable, I found it's better because it makes you choose the time of day that shows the best win rate, that shows the best entry zones. And it's very much something, as I'm doing this SPX testing right now that I find is even more pertinent. When you trade, when you put on these trades, matters a lot. And I find myself going back to things that, like I said, I wrote about in 2009. About, wow, it's not only more important to pick the hour or so that you want to trade a day, but it's even more important to have a cutoff. Because if given time, our human brains will find something to do. And that's not always going to be for the best, right? So if you want to check that out, feel free to check it out at the Simpler Trading YouTube channel. It's at my YouTube channel as well. Some of the examples of the testing that I'm sharing with you all. All right. So with that being said, let's see. Kristen V says, thanks to your analysis, I dodged Baba, okay, and got into Amazon calls that expire next Friday. With this morning's pop into 175, could it possibly go into 180? So, Kristen V, this is just a rule I keep for myself and a rule that I recommend everybody think about. I don't know. That's the only honest answer. I don't know where we're going to be next Friday, but you asked, could it possibly go? So I'll tell you what's in the way, right? All we can do is think about probabilities and what could be the impediment of that move. I would not presume 180. What I would say is we've got to get through, in order to get to 180, you've got to get through 176.25. So I would make that the first obstacle. If we could, and really, if you're using daily price movement ranges, I would use that as an obstacle as well. But if we can take out 176.25, then at that point, 180 would certainly be something to consider. And more specifically, you've got another Darvis level there. So it's not a bad level to think about prices possibly running into and stopping, but we got to get through that VWAP first. As far as a trade goes, nice. What I would say though is always think about what's in the way to the progress and make sure you pay yourself when you can, not when you have to. Okay. So nice trade. Well done. All right. Let's see. Next up, the coffee's hot. Oh, very nice. I got some cold coffee today, David. Yeah. I'm rocking some cold coffee in the mug today. I think I might have had too much already. So Sector Secrets Mastery folks, and later on today, Central folks, be warned. I am fully caffeinated today. All right. Can I assess the ZB move in the hot zone this morning? Sure. So Blake, let's take a look at the 5-minute chart, which will be all the way to the left there. Interestingly enough, a lot of the response ZB had, and you'll see it went straight down. What gives? That's higher yields. Blake, I would say for the most part, what this is reflecting is the fact that the Federal Reserve, the Fed Fund futures, kind of reflecting what the Federal Reserve is most likely to do, you'll see is pretty much fixed and darn near fully discounted for a quarter point. And if for a while bonds are responding to the half point or the half point cut, I think that ultimately half obviously is a bigger cut. It would lend itself to lower yields. Quarter point is a lower cut. It would lend itself to, relatively speaking, higher yields than a half point cut. And so that might be bonds responding to that. The bottom line is this, and this is what I would tell you, why something does what it does, Blake. I can only speculate based on the data that I have. But here's what I will say that's much more objective. This was really interesting and hopefully it'll help. Yesterday's previous session close on the bonds was at 124.40. And do you notice that ever since just after 4 a.m., and that time matters, day trading clock matters, time of day matters. And just after 4 a.m., prices sunk down through the previous session close. That actually corresponds with the Asian session close. And ever since then, we've been in the, as I like to call it, the bearish hemisphere. So in a lot of ways, you could say, gosh, bonds sort of tipped their hand around 4 a.m. and just could not get back above that previous session close level, and down it went. And by the way, the previous session close level is generally just, I'm going to use a 4 p.m. cash close level. It's just psychologically, look, different markets close at different times. But for the most part, if you use a cash close, that's usually going to be the best psychological line in the sand, which is what I call them. that you can use. And this is going to apply to stocks, ETFs, futures, etc. And those of you that took my day trading class, gosh, 5, 6 years ago, you know that we have a number of these lines in the sand that we keep an eye on because they're sentiment reads, right? Are folks waking up or feeling bullish? Are they feeling bearish based on where price is, based on a line that we can see pretty clearly? So that's the way I would look at that one, Blake. All right. Okay, next up is Andy. Yeah, so back in my Forex trading days, which takes me back to, it seems like a lifetime ago, 1999, 2000. And I used to think that I had to trade Asia and Europe. So I remember this really well. The Asian session is kind of a very gradual wind up. Starts with Auckland, goes to Sydney, Tokyo, Hong Kong, Singapore. But largely by 8 to 9 p.m., you've got full participation in those Asian session financial centers. Europe, we would mostly mark by Paris, right? So that's about 2 a.m. Eastern. Now, I'm always going to talk in East Coast time, and this is not accounting for the shift between daylight savings time because the whole globe doesn't shift the same way. So there'll be times of year around jumping back and jumping forward that will be off by the hour. But generally speaking, 2 a.m. European and then 3 a.m. UK. All right. And that's all East Coast time. Danny, do not buy the books. You're getting far more, look, those books are old. My first book was published in 2004, I think. My last book was published in 2009. Don't bother. You're getting my latest and greatest here in Charts and Coffee, here in Sector Secrets Mastery. And you can even check out my YouTube channel. Yeah, you don't have to go spend money on those. You're getting a lot of that stuff here and now, and really better. And, it's funny when I read those books, it's really interesting to think the way I was thinking back in 2009, which is, Rog, pick the right hour of the day. And then fast forward to 2024, mind-boggling, 15 years later, finding the right hour, finding time cutoffs, optimizing, not for the whole day. I don't trade all day long. I love talking to traders all day long, but I don't trade all day long. What a nonsensical thing. And by the way, who here wants to trade so they can sit in front of their computer from 9:30 to 4? Not me, right? In fact, the way that we structure the Sector Secrets Mastery is to reflect what I have found the best hours of the day to be. That's pretty much from the bell to 11:30. And that's when I'm active every day in the room for about 2 hours. 1 hour is dedicated to day trading. 1 hour is dedicated to swing. And that's the way we structure the day. I'm not a big fan of the close, although for some traders, if they go back and test, they might be optimized for the close. That's where testing is going to matter, right? And you say, okay, Rog, I'm better at the close. Awesome. Optimize for that. I know for me, after 30 years, 2 things are true. I'm best in the morning. My brain, my synapses are firing in the morning. After 1, 2 p.m., I'm not as keen on trading because A, my win rate doesn't justify it. And B, I find that in the morning, if I build my watch list, find my levels, do my day trading, I'm so much more in terms of successful, productive for my trading. So, that all of that reflects, it's really funny. For 15 years later, yeah, I'm pretty much the same trader, but with better tools. That's for sure. All right. Am I any more optimistic about the XLK this morning? I'll tell you, Dave, that's probably going to depend on Apple, NVIDIA, and Microsoft, and mostly NVIDIA and Microsoft. So yeah, if they're moving higher, if the NASDAQ's moving higher, those are the individual boats in the XLK. And the XLK is an individual sector within the NAS. I'm optimistic, period, right? Even after we had, and let's just call it what it was, even after largely we had what was a 10% pullback in the S&P, let's not get dramatic about it, right? Too many drama queens out there in the market. And kings, not just queens, drama kings and queens. If I take a look at where we headed lower in the NASDAQ, you'll see it exceeded 10%. And that definitely reflects more of that tech sell-off that we saw. But again, it never really hit crash levels. And the ES was far more formidable, only a 10% pullback from the highs. And let's face it, we've hit how many all-time highs throughout the first half of this year? I don't ever want to say a pullback is due, right? But we're not going to be surprised by it, right? And so, yeah, I'm still very optimistic about the upside, at least in the near term. And we'll continue to navigate August with the relative outperformers in mind. And we'll do the same thing as we go into September. But every month, every week, we want to rebuild that watch list. We want to rebuild what is strongest now and trade that. So what I'm interested in July and August may not be what I'm interested in come September based on those relative performance metrics. All right. Okay. So that's a wrap, gang. Thank you as always. If you have any questions, yeah, Joe, Buffett's buying Ulta. So, it's going to be pretty strong. And Tyler's asking, would I recommend my HPMR or DPMR for day trades? Tyler, I use them both. They're a great combination. If you're going to trade futures, use the HPMR. But if you're interested in the way that I'm doing the SPX, it's HPMRs and DPMRs. Okay. All right, gang. Be good to each other. I'll talk with you soon.